this show is all about you guys, really. It's not about myself. It's not about Ash. Naturally, we do most of the talking, and we give you a little insight into what we're thinking, that's for sure. No holds barred here. You guys are welcome to participate as much or as little as you like. You can listen, you can potentially learn something. You might even find there's some money to be made in the room, given there possibly could be a trade here and there. We just don't know until the market tells us, right? But if you've got any questions or if you'd like to share anything with us at any time, the chat box is for that very reason. And feel free at any stage to post into that chat box. Come on, Mike, if you want. Come on, camera, if you want. We're more than happy to accommodate you in that area. First thing I do each and every day that I trade is have a look and see if we've got a potential breakout on pound versus the US dollar as London session opens, which of course now is only a few minutes away. What I try to do is isolate a range from the previous day's trading, which in this case was Wednesday. Yes, that was yesterday. And I look at the high of yesterday, which is right there. And I look at the low of yesterday, which is obviously right there. And then I have a look at today's trading. Today's trading is outside of those areas. Then I look for the low or high, as the case may be, of the day, and use that as the range. As it turns out, the range of this period, which is yesterday, plus today thus far, is indeed yesterday's full range, which happens to be 125 pips pretty much. Now, the idea is that we're trying to time the breakout of that range. Now, to do that, the rule that I use is I'm looking for a one-to-one breakout. So if I've got 125 pips of risk, I want to see 125 pips of reward before I take any profit. Now, that is basically the criteria for either trading or not trading. So I've got 125 pips up before I hit distance or support, which in this case, to the low side, I do not. I've got the weekly pivot and I've got this swing low. So, and also got the bottom of a channel sitting here as well, by the look of it, inside of the TP1, which is 125 pips, as I said. On the high side, I have to go a little bit wider. There's the top of the range, and 125 pips gets us to not quite this level here, and there is a substantial support level underneath that as well. So I can't trade that. I mean, I can, but the chances of me getting a TP1 are not good, because we will hit support and potentially bounce off that, or we'll hit resistance and potentially bounce off that before we get profit in the bank. So the answer for today is no, and it's becoming very, very boring, I've got to say. And the main reason for that is we're getting very, very big daily ranges. And once we get that, of course, we get the big daily range, we're going to have short distances to our support and resistance areas. So for that reason, we're struggling to get entries at the moment on the breakout trade. All of that said, nothing is for nothing. So we have a look and see, I have a look and see exactly how I would like to trade pound versus the US dollar if I was going to trade this today. Now, it's pretty clear to me that we've got an inverted head and shoulders look here. There's the neckline of that head and shoulders. If you can't see that, I'll point it out. And I know some of you are probably not familiar with the head and shoulders or inverted head and shoulders. But there's a shoulder, a left shoulder, there's a head. Right shoulder's a bit tricky because it's probably got a bit of a double pump there on the weekly pivot, or on that level at least. So all a head and shoulders or inverted head and shoulders is, it looks like a person's body part, if you like. So that being the head, shoulder here, shoulder here. When we, various ways to trade this, of course, if you are of that ilk. And the way I do that is either try and look for an entry down here somewhere if it's available, and generally that'll be as a result of a higher low, which you may have picked up there. I haven't found a way into that. I wasn't really looking at it at the time anyway. But the other way to trade it is wait for this, which is the neckline. Neckline, of course, being there's where your neck would be. And you join those two highs and you come up with a neckline. Look for a break of that and a retest of. Not only did we get a break of that and a retest of that, we've come back underneath it, which complicates the issue somewhat. And for that pattern to be intact, this price would not need to go beyond the right shoulder. If it did, it's called a busted pattern. And if that's the case, then the inverted head and shoulders is no longer of any use to us. So is it or isn't it? It doesn't really matter if it is or it isn't. I mean, patterns are one thing, but they're just one layer of trying to trade. The real reason I would like to trade this long, and that helps, of course, but I see a market structure in this descending channel, right, which is kind of my thing. I like channels, rectangles, any shapes, any structure on a chart is what I like to see. So we are arguably at the bottom of that structure, which means I'll be looking to trade it back to the top of that structure into a confluence area. Now you can see that there's a horizontal level through there as well. The structure is well in place, and I think that's a beautiful target area if we can find a way into the long. Add to that the fact that we've got a monthly trend line that has been broken and retested and rejected at this confluence area, which is another horizontal level and right on bang on 130 mark. Add to that, if you like, that we've got a double bottom sitting here, triple bottom if you want, and potentially this is a significant higher low on this potential reversal, and it does look like a rejection bar. It's pretty tight in here in terms of a monthly chart as to how much space we've got to trade this. But as I come down the time frames, I think you'll see that the evidence that this is bouncing off that level that I spoke about. Now we've hit a soft resistance area, pull back off it. I think this is probably an excellent place to look for a buy. The neckline, if you like, there's the break, there's the retests. There would be worse trades to take than putting your entry above that bar and your stop loss below, but it's a very, very big candle to be trading. So you've got 135 pips and you haven't got that to get to 1-to-1. Again, same scenario. So it's not that great on the risk reward front. What I would prefer to see happen on the smaller time frame, once again, so I can actually reduce my risk, is see a false break of support or something of that nature to tell me that price is again ready to go long. It's not really telling me that at the moment, but if we were to come down here and retest the weekly pivot one more time, then get back above it and retest that trend line or trade line in my case, then I would be happy to trade that long. So that's kind of where I'm at with pound versus the US dollar. It's a long way around, I know. Cad Yen, stop trading from 10th of March, stop at moment 95.70. Gary, let me have a look at that in a tick. And g'day, Lewis. How are you, mate? We didn't get to say a big g'day to you the other day. What about your pound? What about my pound Kiwi? Fortunately, I'm not in it yet. But look at it. It's absolutely bang on the money, isn't it? Exactly where we wanted it to be. So, battle stations is where I'm at, just waiting for something to tell me what's going to happen next off this trend line, which is a monthly trend line, guys. So it's not to be messed with or not to be dealt with lightly. I don't know if it's a trend line, but certainly one of my trade lines, and it is at a key level. So absolutely eyes on it, pound Kiwi, Lewis, for sure. Which way I want to trade it? Not really overcommitted. but I've got to be thinking long from here. It's got to be a bounce favored, if you like, for me. But that's exactly where we were aiming to pick this up, pound Kiwi, on Monday. We spoke about that. So, yep, we're actually right on the money here, waiting for a setup for us to trade that. Cad Yen for Gary. Let me have a quick squeeze at Cad Yen. Holy snap and duck shit. I mean, holy goodness me. Big breakout, right? So, Gary, what are you telling me? Let me have a look. Stop. Oh, you want it to stop. Trading from the 10th of March, stop at the moment. Oh, you've been trading it since the 10th of March. Awesome. You're having a wonderful time then. 10th of March is... Why can't I find the 10th of March? I'm on a weekly chart, that's why. Wow. What a great trade. Superb. Will it stop? Is that the question? Wow. All I can say is it's extremely overbought. The other thing I can say is I'm in a similar situation with Euro Aussie going in the opposite direction. And I'm going to tell you how I deal with this today. Look, it's my thing. It may not be your thing. But if you can relate what I'm about to say to your trade, then perhaps that would make sense. So with Euro Aussie, for those of you who have been in Euro Aussie with us since we got into the market up here, traded on a daily chart, trading this bar. And 1, 2, 3, 4, 5, 6 days, just bang, pretty much straight down. Every one of those is closed on or near its low, suggesting that nothing was going to stop anytime soon, as it had done, for the previous, month or two. Just falling out of the sky. Incredible how that has just gone down, 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 down. Now, I've moved my stop loss to here today, 147.25. I think this might be 35. Why have I done that? Well, because I've taken 2 lots of profit here, I am playing with their money, so to speak, and I hate that expression. And the reason I hate that expression is if you relate to this, and I use this analogy this morning in my preview or review more than anything. I love these people who go on to quiz shows, and those quiz shows where they win a bit of money on day 1, they come back, win a bit more money on day 2, and they come back in day 3 and they win a bit more money. And they put better contestants against them the more they win, all that sort of stuff, right? But they get to a point where maybe they won $100,000. And then they're asked the question at the end of the show, do you want to take your $100,000 or do you want to come back tomorrow and play for $250,000? And of course, $250,000 to most people is a reasonable amount of money. Could be life-changing for some people. But what about the $100,000? So you've actually got $100,000 if you walked out of that room right then and there. If you come back tomorrow, you're risking $100,000 to win $250,000. 2.5 to 1. That's not such a bad risk-reward ratio. But it depends entirely on the size of your bank account as to how much $100,000 means to you. And that's exactly how I relate this scenario to that scenario. So what does this mean to you? What does this mean to me? I consider that there's an exit point at 146, which is that far away from where we are right now. So that makes my risk today 68 pips. Sorry, that makes my reward today 68 pips. My risk today, if I left my stop loss up here, would be 486 pips. Why? Sorry, 503 pips. Sorry, my stop loss wasn't there. It was down here somewhere. But I would be risking, I think, 200 pips or something like that. 225, I think, where my original stop loss no, sorry, my trading stop was today. Would I risk 225 pips to put 68 in the bank? That's the equation that I use for this particular scenario. So my answer is an undoubted and unequivocal no, I would not. Therefore, what I do is completely eliminate most of that risk. And now I'm risking 57 pips to gain what now was 70 something, was it? 75. That makes more sense to me. And if I hit that target, happy days. If it comes back and takes my stop loss, I don't give a toss. At the end of the day, we've made some good money on the trade. So I hope that helps with your determination, Gary, but it is entirely a personal thing as to how much you want to risk on the remaining position if you feel there is more reward to be had. That's kind of the best way I can put it. But every single person is different. And, you know, if you want to trade these longer term trades, as I do, because it suits my my time poorness at the moment, then that's kind of the way I need to do it. Money in the bank, can't go broke. That's my sweet spot at the moment. If I was trading 30-minute charts, I wouldn't be in this trade, right? I would have got out many, many moons ago, but that's not the case. So now's the time for me to tighten up my stops dramatically, because I think we are at or arriving at an inflection point, and it's only 50 pips away. So trailing stop very, very tight. Okay, I see Ash has fallen under a mower. G'day, mate.
How you doing, buddy?
I'm going well. Yeah, going real well. You've had a little bit of a shortening of the sideburns there, I see.
Yeah, it was a necessity more than anything else, mate.
Yeah, same here, mate. Actually, my wife was just on my back. She said, "You need a haircut." I said, "You're right."
She was on your back, and she said that.
Well, yeah, it feels like it. I just have got a crook back.
they got clinics for that.
They have.
Good morning, Lewis, and to all. Yeah, interesting, mate. Lots sort of happening, dynamically in the market today. I've still got my shorts in the market, but I'm sort of tempted to hedge it out. But I still see a little bit of weakness here. I think I'll show you my charts here.
Yep.
We will. Can I show you my charts?
Look, those things that are moving exponentially. It's quite amazing. Those that aren't doing nothing, of course, but those that are moving. Let's have a look around,
mate. Let's have a look around and see what we've got. I mean, we've got interesting stuff from as you said, the CAS, and what I find quite fascinating here is the dynamic between the commodity exporters versus the commodity importers, and we will see sort of what I mean by that in a minute. So let me just share this screen here. So I've got these shorts on the market. I'm slightly above my shorts. I had a load sort of going on here yesterday. There was shorts going on, there were longs going on. It was all over the place. But I've managed to clean it up quite substantially. So I've only really got 2 positions on, and I only really needed to get to the monthly pivot now to kind of break even on this last little bit here. And it was interesting, after the discussion we had on Monday. It really was, when I think about it, it really was a general overview, because I did so much work yesterday just to kind of level things off, just so they were. I just didn't have the exposure in the market that I did have a few days before, and there are other permutations, and not to kind of go into it in too much detail, but there is a way you can hedge and reduce your position while taking profit on the hedge as well. So there was some of that going on yesterday, but I am thinking of re-hedging the market here, just because when you look at this on shorter term timeframes, we are just above this daily pivot here, and the market looks okay. It looks like it may well survive here. The question is, does it get back to the highs? and if it does, then I should really be trying to hedge out any risk here. So I'm just going to set one up just in case I need to. Yeah, but it is difficult. Yesterday did spook the market. So we had Rishi Sunak come out and give a budget announcement. And after the budget, there seemed to be just a bit of a sell-off. I mean, there was a sell-off in global equities, so I think it was deeper than that. The budget announcement probably suggested, but the budget did kind of change things. And this morning, I'm not seeing a whole bunch of interest in stocks at this particular stage. Some of the mining stocks are doing okay. Oil is doing okay. Some of the mining stocks aren't doing particularly well, like Glencore, as an example, is down near 3%, and that is probably the main laggard. Even the banks started to push to the upside, with potential noise about interest rate hikes. Then the banks would probably do quite well, but that seems to have frozen out a little bit, and the market just seems a little bit undecided so far this morning. So I might hold off on the hedge just for a little while, and it won't matter too much if we leave it, because we've still got some in the tank that we can come back with. So I would say the bias is slightly to the upside, but there's just a little bit of uncertainty going on. Now, if we look around the markets, then let's have a look at the different signals that we would use. VIX, very, very sleepy. Which would suggest that, that downside, if it was to come, was probably be more of a grind down rather than a big explosive move down at this stage. It's broken now through a little area of support here, but it still may well just prove to be a little bit of a false breakout. So nothing confirmed just yet, but the VIX does look, and there's a little horizontal level across here as well. The VIX, in some respects, does look like something which is weakening rather than strengthening. That should be good for global equities. Gold is giving us a potential signal for a long, but look where it is, right on top of this right shoulder here, left shoulder here. So does it start to ease back down again? Above the weekly pivot is a bit of a better signal, but not really that convincing in many respects. Same with silver. If we bring up this trend line in silver, then what we've got is silver back above that trend line, but under the weekly pivot. So not particularly clear there either. Probably looks slightly more bullish than bearish, but not particularly clear. Again, that puts a big question mark on equities as well. What's next to happen? Nasdaq did have a bit of a move lower yesterday. Does this suggest that we are going to come down to the monthly pivot, or have we still got a little way to push on the Nasdaq before we do start coming down? I'd say that's a bit confused, and that would suggest that there may well be some downside upside within the day. I'm not sure whether this is enough of a retracement and we start to go through it, but it might happen. I think the Nasdaq probably does have a little bit further to go long before it comes down, but again, little bit confusing on the Nasdaq. S&P. Same, very, very similar, same sort of thing. Little bit suspended up here. This is a much stronger level down here. So will it come down to test that level? It's difficult to know, but this buy yesterday did suggest that may well happen. But it still could get back to the highs before it does start to drift down. And I suppose that's the quandary in many respects with the FTSE. That it could actually rally to the upside before it comes down, but I guess I'm going to be willing just to leave that on. But back to these commodity currencies, mate. I mean, look at the Aussie, nice move to the upside versus the Swissy, decent against the yen. No point in getting against the Kiwi, but look at it against the dollar, decent move to the upside. Then you switch to the CAD. CAD's had a decent move against the Swissy, decent move against the yen. Decent move against the Sing, decent move against the Euro. Euro's coming down, obviously, so it's the first one of the two. Pound CAD coming down. So the commodity-based currencies are outperforming right now. which is it's an interesting dynamic, and it would suggest what. So in some respects, you look at this move and you think it's just too late. But actually, as if global events don't change, then it isn't too late. It just suggests that if there is a rally from here, then it would create further opportunities to the downside. It doesn't appear that there will be a shift right now in sentiment between the commodity-based currencies and the importers. So you got the net importers, the euro net importer, the pound, the UK net importer, and then you got net exporters. The Canadian economy is a net exporter of energy. You've got the Australian economy, a net exporter of commodities, and then the yen sits on the net importer as well, with a central bank which has no suggestion that it's going to change. So levels become difficult, and you will now look at the potential bounce points. Unfortunately, the way I'm going to read it is I'm going to have to say, well, if there is a bounce, that would probably suggest that there's an opportunity to continue the trend lower, rather than trying to take on what the global picture currently is. Actually, what we didn't check was WTI. That was the final thing, and WTI has had a pretty healthy bounce from this monthly pivot, and now it's edging up higher again. I thought there would be a bit of a range in from here down again, but it's taken that level out. Now, will the range start maybe up here instead? And this is the battle with some of this volatility. The ranges might be wider than you think. So to call this a continuation of an uptrend still would be a bit difficult for me. I'd still be a bit uncomfortable with that. But in saying that, there's nothing to suggest that wouldn't happen. There's nothing to suggest that the trend isn't going to continue to move to the upside. So yeah, bit of a situation I think we've got right now where it would suggest that there's still some room higher in equities, probably in oil, probably more room to the upside in exporting currencies. And that would put gold and silver probably in that sort of that higher band as well. But it's yesterday was a bit. It wasn't spooky, but it might have just laid out a bit of a marker.
Yeah, I think effectively what you're saying is that until something changes fundamentally, we might as well just go with the flow, because fighting against that at the moment doesn't seem to be a good idea.
Yeah.
And like I said, those currencies and indices that are moving either substantially or I'll put it inexorably, it would appear. So yeah, fighting against that at the moment doesn't make sense to me either. I agree 100%, which is not so much good for me, because I like to fight against it. That's kind of where I come from. But I agree 100%. And look, there are pretty obvious pickups if you do maintain that stance. In other words, buy the rally, sell the dips. Buy the dip, sell the rallies. It just seems to be that way at the moment until something changes, and that's probably going to be a war announcement, or God knows what else is around the corner.
Well, I mean, the inflation narrative, isn't it? Yeah, do you know what? Actually, there's two other notable things I think to mention. The dollar under pressure as the world's reserve currency. That there's already been sort of a few moves in different nations saying, what, pay us in X currency, and they're not using the dollar. Putin's now saying if you want to buy any aggressors to Russia, that he sees as aggressors to Russia, if you want to buy our energy, then you will have to pay in rubles. So so obviously, he's trying to kind of bring the cost of the ruble down, and this is one way to do it. Could this be
interesting if that catches on?
Absolutely, mate. Yeah, absolutely. I mean, we've seen India, I think, suggest something similar. I think about maybe buying in yuan. I'm not 100% clear on that, but I'm pretty sure that that there is some shift in the dynamic now of the dollar being the global currency, because of this, and as you say, could it be a trend that starts? Is this the point that you start saying, actually, you're going to need gold? You're going to need gold in your portfolio. You're going to need Bitcoin in your portfolio, because these things, at least, I mean, less so gold, but at least Bitcoin has got that decentralized aspect to it, so it can't be manipulated in the same way that they have with the dollar, as an example. So, is this the point that people start putting these things in the portfolio? I'm not saying that Bitcoin is going to be the reserve currency. I think that is, probably for the fairies, but I do think that there's probably a portfolio that says we're going to need some protection here. And where do people sort of go back to universally? They go back to gold. What's the new kind of gold, if you like? Then it's Bitcoin. So there may well be a shift now away from the dollar, and it might have started. We've been talking about it for a couple of years. And is the dollar system about to break? And is this the catalyst? The fact that Russia are demanding to pay in rubles. I ship a truckload of.
Yes, you want a truckload. That's right.
Yeah, you would. Yeah.
The thing is, and like you said, we've been more than 2 or 3 years. We've been talking about this recalibration, and what it looks like, still don't know. But it's slowly unfolding, and each and every day or month or occurrence, if you like these world-changing events, like the war at the moment, as that groundswell gathers momentum, and Putin may well be the one that triggers it, right? With what you just said, that he wants now all the power to be paid for in rubles. Now, it brings to mind a question to me: why do we need a reserve currency?
Well, I think global trade is the reason that they use it, and I guess it's maybe calculating goods. I mean, it's a good question, but maybe the calculation.
But that's what foreign exchange is for, isn't it? Really, at the end of the day, if you do want to buy gas off Putin or whatever you want to buy off Putin, then okay, why do you need to exchange Australian dollars to US dollars into rubles? Doesn't make sense.
Yeah, it does, mate. I guess if you were, let's look at it from the case of Mexico. If you were to pay in Mexican pesos, the volatility of that particular currency is so high. One day you might be getting a certain value, and then the next day, actually, that value might have halved. So the reason that they use the dollar is because of its trusted,
its stability.
Its stability, yeah. The price stability in the dollar is potentially higher than something like the peso or the Thai baht, and because of the state of the economy, that's why I would suggest that the dollar is the one that people would use, and it would remain the reserve currency.
But it now does make a perfect case for digital, doesn't it? Or cryptos, if you like.
Yeah. In many respects it does. I mean, there's still that volatility aspect, I suppose, with cryptocurrencies, that you might pay in Bitcoin, and then the next day it might be worth half of what you paid for it. That's extreme, but there is that aspect to it. But in some respects it does, because what you can't do, and this is what's happening with the US. The US are effectively saying any Russian money that is held in the United States. So if Russia have bought a load of dollars and they're holding them in the United States banks, then the US government can confiscate those finances. Well, you can't do that with digital currencies because it's on the blockchain. So you don't have that central area where the finances are held. So that's that's one of the reasons why digital currencies become interesting, because you can get to it whenever you need to. It's all on the blockchain. It can't be confiscated in the same way because it's not held in a centralized unit. So yes, that's where these specific digital currencies can be a lot more useful. But I suppose you could do the same with the if there was a USDT as well. A CBT, if there was a central bank digital currency, that would probably be on a blockchain. So again, yeah, you probably could make the case for digital currencies right across the board. I'm not sure how it would work in this with a central bank digital currency. If you think about the United States as an example, and maybe this is the problem with them. If you think about that nation as an example, maybe one of the reasons they're finding it so difficult to make the change is because they won't effectively be able to hold those, that currency if it's going to be sort of, in the same way that Bitcoin is, if it's going to be on a blockchain, unless they control the blockchain, which I suppose that, there are ways that they can probably do that. So maybe it makes a case for digital currencies, but maybe not central bank digital currencies. If they've still got the ability to control. If you're Russia or you're China and they're going, hold on a minute, the United States have confiscated money that Russia own. What if they do the same to us? Yep. What if we own dollars? And they do the same thing to us? And this has happened before. People have confiscated gold reserves before, and that's the other thing with gold. And this is where, again, you say, well, maybe, digital currencies are better, because any gold that's held in a vault of the enemy, they can confiscate that stuff. And the United Kingdom did it to a billionaire, a few years ago. They confiscated all their gold. So the dynamic is so convoluted and interesting right now that you say, well, I would just say, I don't know what's going to happen. Nobody knows what's going to happen. So how about you just put some in your portfolio just in case that happens?
It's a good case for hedging your bets, isn't it? At the end of the day.
Yeah. I would have thought so, mate. I would have thought so. I don't know whether there's a whole bunch of interest with Bitcoin because of that, but people are buying Bitcoin again. It's had a pretty decent rally over the last few days. So and many digital currencies have had a decent rally over the last few days. I'm not saying that's the reason why. It might well be just because the markets have been rallying for the last few days, so people are a bit more confident. But if you think about their use case, then I think you could make that case for them.
Cool. It's an interesting subject. There's no doubt about that. And where that finishes, you've got to pay attention, right now, I think, because something is going to happen. We are recalibrating. We're not going to be doing the same old thing or the same thing that we are today in 5 years' time. I've got absolutely no doubt about that. Absolutely no doubt. What we're trading, I don't know. It could be corn or wheat or barley or coffee or something. I don't know. Paul L. Why did the pound, despite good numbers in Wednesday's news, drop like a stone? I was asking myself the same question when I woke up this morning and found the trade that I took yesterday. Yesterday morning. No, Tuesday. Sorry, which was pound Swissy long, which hit TP1 just nicely, no problem at all, and then went, as you say, dropped like a stone against the Swissy. I can't answer that question. Maybe Ash's got a thought process on why the pound just dropped out of the sky on the back of the good news.
Are we talking about yesterday?
Yep.
Yesterday. So yesterday was the budget. We had the spring budget in the UK, and the Governor Bailey was talking as well. And the thing about the central bank in the UK is that they are effectively saying there are certain aspects of this inflation that we can do nothing about. So where the Fed is more hawkish and is basically saying, we're gonna rate hike until we kind of even things out and get things on an even keel. The Bank of England's rhetoric is different. The Bank of England's rhetoric is inflation's a problem and we can deal with it to a degree, but many of the aspects of this inflation caused by the conflict and the rise in oil and gas prices, we can't control. So don't expect us to hike to the planet because to the moon, because that's not the answer. That's effectively what they're saying. So slightly more dovish comments from the Bank of England, and Rishi Sunak coming out and effectively saying that we're kind of on hold You know, that there's not a lot that we can do about the situation. So I think that the fear from you, the traders and investors for pounds, is that inflation is continuing to get a bit more out of control, and the instruments to control that just won't be there. So a switch, if you like, in what people thought, and this is the fascinating thing. If you look at the statement between now and a few months ago, I think they were basically saying there will be a need for interest rate hikes. The most recent statement said something like there may be a need for interest rate hikes, and that one word "may" changed the dynamic. And this is where reading between the lines is so important, you know, where you can get one slight kind of deviation from the narrative of before, and it spooks everybody. It was, you know, from the stuff that I was looking at, it was that they've just switched to a slightly more dovish outlook than they had before, and it didn't you know give the market any.
Didn't go well.
No, it didn't go well. No, and again, mate, you know, it's back to the net importing thing as well. You know, net importers of energy is a huge problem for nations.
Yeah,
you know, and particularly the likes of the UK and the Eurozone. Very, very difficult right now. What's going to happen, and because we are net importers, we don't have the control that the likes of Canada and the likes of Australia have over these inflationary pressures. And it's always a question of not whether you've got inflation, but what's causing it. And it doesn't affect every nation equally. So you know, with that in mind, the Bank of England coming out and saying, actually, we can't do anything, which they're probably right about. You know, it's not anything they can do with monetary policy which is going to curb this thing. It's whether they can get more supply into the market. And the only way that's going to happen is if there's a cooling of rhetoric from the Ukraine and Russian officials. So that appears to be what it's about, to my mind. And as I say, that isn't changing. So if the pound starts to rally, there's no suggestion right now that that's because that there's going to be anything that the Bank of England are going to do. So that's where I would look at it and say it's probably coming down again soon after.
Interesting. Could I share the screen?
Yeah, please do, mate.
Okay, that brings into sharp focus this pair, which is euro pound, and I've got euro pound in a buy zone, which is interesting. Before I share that with you, I'll share euro dollar with you. Now, it's very, very difficult for me to be bullish the euro, full stop, and versus the dollar in a war zone situation is even more difficult. Yet, here I am with a long order in the market on euro versus the dollar. And here's why. I've got too many lines on this chart for my liking. Let me get rid of a few. We spoke months ago about this perfect false break on euro versus the dollar. And I said at the time I should take a photo of this and put it in my textbook if I ever write one, which I probably won't, but it certainly goes into my teaching manual. We've got a clear break to a monthly trend line, consolidating underneath that, re-entry below the trend line or trade line, then the retest. And we said at the time, this is a trade that we need to take. And we didn't in the show, I've got to say that. But look where it went to, straight down to this support level, which has got pretty good credential over time. It's been support here, resistance here, support here, and strong support here, which drove it up there in the first place. We're back there again, but even more so, you can see the confluence of this monthly support trend line gives this a whole lot of credence for a potential bounce area. And I think we've already done that to a degree. against the dollar. The hard part, of course, is the interest rate scenario with the dollar. Now, if I look at this in isolation, I can see a break, re-entry, current retest on the weekly chart. Then I'll look at this broadening pattern that we were looking at for the last few weeks. And I see that we tried to come back inside it. We did come back inside it and we retested it, but price fell away again. Fell away only to this game changer bar on Tuesday. Game changer bar, for those of you who are unaware, is something that I call a key reversal bar, which is a candle bar whose, in this case, low is lower than the previous day and it's closed on or near its high. That's something that I do like to trade, not in isolation, of course. Nothing should be traded in isolation. But when you've got momentum on a primary chart being a monthly chart, I can't say I've got strong momentum to the upside, but I've got certainly a technical pattern that suggests to me that we could get some. So then I see that game changer bar after a bounce off a support level, so potentially a higher low as well. Didn't do anything. I didn't trade it, but it didn't do anything. Then yesterday, we got this inside bar. Now, an inside bar on top of a game changer bar is, to my mind, just a little bit more energy being built up here for the buyers to come in at the top of this candle. So that's why I've placed this order long euro dollar. If you want to follow it, the entry is at 1.1047. Got a 90 pip stop loss, which is underneath Tuesday's bar. And I'm going to take first profit at about 0.5 to 1, which is 43 pips, and just at the highs here, or the open and close here, sorry, of that swing. I've got, the reason I want to take this trade is because the reward to risk is fairly substantial. I've got this area in mind as a target, right? So that's, I think, 550 pips for 90 or something like that. Bit more, nearly 600 pips for 90. So that's why I think that's a reasonable position to take. I think the reward to risk is quite good. Okay, so that's euro dollar, euro pound. Euro pound is nowhere near as clear in by way of a confluence area, but it is a very strong support level that we find this at, in my humble opinion, where again it's been strong support here, resistance here, support here, support here, support here, and now we're there again. Question mark is, are we through that level? And if we're through that level, have we retested it and therefore going short? If that's not the case, then, you know, as a range trader, this excites me. And here's now what I have to work out. Is there a timing point to get into this trade long? And is it now? I've got to say it's a bloody mess at the moment on the weekly chart. It is a real mess. And, you know, this price action across this level kind of tells you everything you need to know, because every day we're across it, up and down, up and down, up and down. Yesterday, there was a signal to go short, and today we're again struggling with that level. I think I'm willing to take this on as a buy, but I need to see a false break of something. And I just don't know if I can trust this level, because, as I said, each and every day, we're just across it and across it and across it and across it. And there's no secret to that, because it is such a strong level. How do we get out of here? I've probably got to seek a higher low based on this bullish engulfing bar here. Is that it? I don't know. I really don't know, but it doesn't give me a clear reward to my risk. So if I were to come down here and see a bar that looks something like that or that, that would do me. So I want a red-bodied bar probably sitting at about that level. So back down to here, low test bar, red body. That's where I'd look to go long, because the reward then could be, if I get a little bit of profit in the bank here, get myself safe in the market, the reward then could be substantial on the second half of this trade. So it's a not yet thing for me, but it's most definitely one that I want to watch and watch closely. Pound Kiwi was the other. We went through that one. Euro pound, you now know about. Euro dollar, you now know about. Euro Aussie, I've told you what I'm doing with that. Tighten my stops up incredibly. Pound Swissy, I'm now out of that trade. Very small profit on that, but disappointing, really disappointing that it came back off there. I thought that once we got through this level, we were away, but that wasn't to be the case. I'm not interested in it now because I've got the monthly pivot here, weekly pivots here. I think we're just going to oscillate inside this area for some time, and I don't want to be involved in that. Doesn't make sense to me. I think that's kind of where I'm at, mate. I'm not that interested in everything else.
I like the Euro pound trade. I'm I'm with you on that. I think that's starting to look like a bottoming out down there. Looks like a bit of an inverted head and shoulders sort of happening, week on week, which does mean that there's probably another few weeks to go before it kind of it really proves itself.
Yeah, it's a not yet thing, but keep your eyes on it. Yeah, I think so.
Yeah. But given the situation, because they are both affected by the situation of being kind of net importers, I think the range is more likely to hold with something like this. I don't know why at this stage, particularly with the Bank of England kind of slightly changing stance, why would the pound strengthen against the euro? I think looking against some of the other currencies, you could make a case, but this is one of those things where you kind of you could look at the CAD and say, like, because the CAD is a high producer of oil, then we should be looking for buying opportunities, and that is true. But I think that it's one of those things that you kind of come back and say which pair, which currency we're going to trade it against, because some will be more equal than others. If you like.
Well, you could do like Gary did and trade it against the yen, which would make perfect sense.
Oh, absolutely. Yeah.
And now that's been proven. Yeah. That's been proven 100%.
Yeah.
There it is.
Yeah.
Actually, further on that, Gary, I did have a look at this a little bit more, and there doesn't seem to be any reason to get out of this at all, I've got to say, until you get up to 99, and you're only 96.70. So I think there's another 200 odd pips available in this one, at least.
Cad Yen, let me have a look at that one. Just to sort of, I agree with you. I mean, thinking about the fundamental picture, the Bank of Japan are outdoing everybody, and they have given no indication that they are going to be on the move at all. And the numbers from Canada are actually pretty good. Oh, I haven't got enough data.
Yeah, I'm a massive fan of the CAD.
Yeah. Numbers from Canada.
I keep saying that. I can't find my way into a trade at the moment.
That's the difficulty, isn't it? But you see, this is the thing, mate. I think, one of the reasons that I kind of I like watching your analysis is that it does involve a high degree of discipline. And even though you might be shaping, looking for something to shape up, the fact that you will just wait and be patient until you see exactly the right thing is a great lesson to us all, really. And I think you need that with currencies, more so than other things, because currencies can literally flip from one to another depending on the dynamic of the planet.
Yeah, that comes from 15 odd years watching charts, and maybe 4 or 5 of those years watching cash burn.
Yeah.
So that teaches you that, oh, hang on a minute, maybe what I'm thinking is not necessarily aligned with the timing of the market.
Yeah.
So hang on, I better readdress that, and I better rethink that. So that's, and I always say it, the very turning point in your career as a trader is learning how to stop losing consistently.
Yeah.
You know,
Number one.
Once you've crossed over that bridge, trading becomes a whole lot easier.
Yeah.
So yeah, that's something I learned many years ago.
Yeah, I think it's brilliant.
It isn't easy. It's definitely not easy. But once you've got that in your head, I think it's not so hard.
Yeah. Lewis is asking what the prospect on silver from looking at the charts.
Mate, I've traded silver once and it burnt the crap out of me. So I'll defer that one to you.
Okay.
I'll certainly give you my opinion on the chart, but not how to trade it.
Yeah, I think in many respects a very interesting one.
I think I thought I was trading for $10 a pip, and I was trading for $100 a pip or something.
Yeah. Well, let's break it down fully then. Let's have a good look between us and see what we think about this. What's that done? I'm gonna make this a little bit bigger.
But I've got to say this: I must start learning how to trade these commodities.
I think silver's a really nice one because it's volatile enough to kind of give us some genuine movement, which is great for a trader. So silver, let's have a look. So firstly, this is the monthly chart currently. So the question is, with what have we got? 1, 2, 3, 4, 5 days left in the market. What does this bar look like in the next 5 days? Let's have a look on the weekly. Weekly's just given this this little false dusk, which is a good sign. So that's positive. This 3-bar push, and you guys may well have heard the term evening star, the evening star or the morning star. Now, the evening star is going to look like this on your charts. It goes, bar 1 goes up. Bar 2 is kind of the star, if you like, and traditionally it would have a gap, and it'd be like a little shooting star. So bar 2 would have that little gap, and bar 3. It doesn't matter on the color of bar 2, by the way. And bar 3 would come back down again, and it would have to get in 2/3 of bar 1. Get back in 2/3 of bar 1. So that one there is bar 1. Okay, that was bar 1. So so bar 1, 2, and 3, and bar 3 needs to come into to bar 1. Now, if you look at this over here, these 3 bars are looking like a little evening star kind of pattern. The most important thing about bar 2 is it's got a small body. It doesn't matter about the wick. So it just needs to have that small body. This bar can have a wick like that, no problem. So the bar 2 has got a nice small body. Now bar 3 has come down, but has it closed 2/3 into the body of bar 1? It's got to close 2/3 into the move of bar 1, and I'd say that's around about, I don't know, 50% or something. So this becomes more bullish. So the evening star would be a bearish signal, but this becomes a lot more bullish when you see it like this. This here is an example of an evening star pattern over here. Now you can see that nothing in trading is nice and clean. You're never going to get really nice clean signals, but here we got an evening star pattern over here. So you can see bar 1, 2, and 3. Bar 1 pushes up, bar 2 gives a little small body bar with a kind of reversal signal, and then bar 3 pushes down 2/3 into the body of bar 1, and it closes. Sorry, not pushes down. It closes 2/3 into the body of bar 1. This is the first signal of this run to the upside that this market is coming down, and you tend to find them at the top of rallies. So
you got a morning star there as well, mate. 2 lows back from the market.
2 lows back. This one here?
No, from the current market.
This one here, perfect. Yeah.
No. Next one down.
This one.
That one.
Yeah,
Yep.
that is a beautiful morning star. Yeah, this one wouldn't actually qualify, but yeah. So this is a morning star, and you can see, Jeff's picked out a really nice one here because actually, look at the size of the bars. The size of the bars don't matter at all. It just matters that you get the specific pattern. So bar 3 just needs to close 2/3 or more above bar 1. So this is a morning star. This is an evening star. This
actually, mate. While we're on this subject,
yeah.
Do you know what a ring low and a ring high is? One of Julian's
I
patterns?
think it's a morning star and an evening star. I think they're basically the same thing.
Right. Okay.
From what I gather.
That's what I thought. Yeah,
yeah.
I'm not sure.
From what I gather, I mean, I'm not sure whether this might be classed as a ring low. I'm not sure whether the ring low could involve more bars than just the 3. But I call them tower tops and tower bottoms if they have more than 3 bars, just because that was the terminology I learned. And it's all terminology, and it's all basically saying these charts or these patterns are indicating this. So when we see this with this not really convincingly closing 2/3 into the body of the first bar, that would actually be a more of a bullish sign than a bearish sign. So on the weekly, the weekly looks okay. I don't think you could read a lot into it because it wasn't a hugely failed evening star, which would be the false dusk, and it wasn't really an evening star either. So that's a little bit indecisive to my mind so far. But if we start looking at some of these areas that it's got through, all this has done is broken through an area, come back, tested the area, and at this stage, you'd have to say that, considering that the false dusk here, you'd have to say that this would be pretty bullish. This is a pretty bullish signal. You get a hold here, that would indicate that there's a buying opportunity there. Now, if that does happen, and that buying opportunity does happen over the next 3 to 5 days, that's going to change the look of this, and that's not going to look so bearish. So that's where we are with this. But if in the next 5 days it fails and you see silver under here, then that changes the dynamic again. So this is one of those situations that you actually, to my mind, you say you don't have enough information to make a decision yet.
Yep.
You've got conflicting views here. The monthly will tell you a whole bunch, and if the monthly holds, that would suggest further upside in silver. And you might well miss the lowest point of the upside, but it would suggest further upside in silver. And now you've got an area, if you were a longer term investor / trader, you've got an area that you would say, that's where I'm wrong, and that's where the stops are going to go. So if you can enter on a daily somewhere in this area, I'd say you're in pretty good shape after the month is closed. Now, if you look at this on a daily, the daily is suggesting that we are at a level of resistance, and this is probably going to come down to here. Now, that's a really important line. If it holds above that area, then it's potentially bullish, and if it gets below it, it's potentially bearish. If it's right on top of it, I'd say you're in the same position where you just don't know. You want to see a really clear signal, I think, I suppose is the point. The point to me, the chart suggests to me that this could go either way. And if you could see a scenario that Jeff has been teaching us about, then something like that, and then something like this would be ideal.
Back up the truck.
Up there, right?
Yep, back up the cash truck. If you see that.
Yes, and then you got your entry sort of like below that, and if it does start to fall, then it's probably going to fall back to its lows. Anything else, you are really looking for a hold in this scenario, a hold in this area. If you're looking to go long, you're probably looking for this to come back down, maybe not necessarily come back down to the lows, but at least come back down somewhere along the line, and then create something where it does actually get through this area and then back again. And then you're looking for along there. I would have thought. Then you're looking for that to happen. So I think a few different things would promote a decision, but I don't think that is clear enough just yet. Your line's above
that's the whole thing.
Candle. Well, I wonder if that's the case. I'm on futures. I'm on the futures. So I don't know if you're on the futures, but I'm on the silver futures here, and it might look slightly different on the cash.
That's the whole thing. I think we get carried away as traders at times when we've got this undeniable sense that something is going to happen directionally. Yet, as impatient people and the keenness to be in the market, we actually will take something based on our bias rather than our sense of what's going on in the charts or what's
Yes.
going on in front of your eyes.
Yes.
I think that's the great temptation that we need to overcome.
Yes, I totally agree with that. And it is a battle. It's a daily battle, isn't it, Jeff? That's the thing. It's like it's not something that you deal with and it's gone. You're dealing with it every day. You're dealing with as a trader. And I'm saying this to hope to give you guys some comfort that the feeling that you want to do something never goes away. It's just that you're able to control the ability to not do that with greater proficiency as time goes on. You start to trust your preparation, and that's the key. You prepare, and then you trust your preparation, even though the market might throw something up, and you see something that you could have done that would have made you money. Because more often than not, it doesn't, or it causes you too much in mental equity. It doesn't become worth it. And the opportunities are so vast with trading that you just learn to wait. But on the whole, to be fair, I still make those odd mistakes where I don't necessarily sort of maybe for whatever reason I'm not quite feeling quite there. But fortunately, I think what the other thing that will tend to happen is, and this is the good thing about learning to trade and doing anything else, you can make the odd mistake and still be okay. Still make money. Yes, we want to try and get to that robotic style of trading where we just do what we need to do because that's where the money really is. But as humans, you will make the odd mistake, and you can still make the odd mistake and still make money as long as you recognize it quickly enough and you don't then go go ahead and repeat it. One of the things that I sort of say to myself after I've made a mistake is that mistakes compound, and that's the time that I like to step away, and come back when things are fresh, because I'm probably getting a little bit too drawn into things. So
yes, you get emotionally involved with it because
exactly. You make a mistake.
You want to correct that error.
Well, why do that? So you try and fix it up, but actually you don't need to. You can just wait it out. The market is actually a lot more generous than it initially appears, I think. And it is difficult and frustrating. People say, I don't want to get into stocks; they're too dangerous. It's probably not the stocks that are too dangerous. It's just us. We're too dangerous with our own financial decisions much of the time. So we just have to, try and control ourselves.
I'm going to get into stocks. I'm going to get into all sorts of things.
Give me 1 second, mate. So I've got a phone call coming in that I need to take. Oh.
You're right. We're just about to wrap up, so I'll just pinch the screen as well.
Okay, great.
And silver. Have I got a silver chart? I don't think I have, because I want to have a look at this too. Silver. XAG. There you go. Starting to get interested in this stuff. because you do need a little bit of versatility in your life. Currencies, whilst I love them to pieces, oftentimes they just don't give you a setup, whereas another market might. So if I look at this chart, the very first thing I see is undeniable, and it's those three high test bars. Now, the interesting part about high test bars is that I've got a system that allows me to trade high test bars long, not short, right? In this particular instance, I'm kind of thinking that because I'm looking at a monthly chart, that's a massive call to be saying that this is going to go through that. But as Ash has said, we don't know yet whether that's going through that level or not. And until it does or doesn't, then how can we just go, well, okay, I think it is, I'll buy it. That's where you start getting into trouble, in my humble opinion. And again, when I look at this chart, the other thing that I see is this. So not only have I got that horizontal level, which has established itself in the last, 2 years, this is COVID territory. I've got a monthly trend line that won't be denied. I've got a box range at which we are the top, and we're coming off the top at the moment. So my immediate thought process is the first thing I'll look for is a lower high now that we're back in here, to give me the indication that this is going short. But it's not giving me that. It's just giving me a range. So I've got a range within a range. And until I see price, to get a lower high, you could call this a lower high, right? But to get a lower high, you need to have two things, in my humble opinion. You need to have a sell-off, and you need to have a rally that fails to take out the previous high. That, to me, constitutes a lower high. This does not constitute that. We haven't had a rally off here. All we've got is a range. So until we get that rally that fails to take out the high, therefore giving you a significant lower high, I can't do anything here. The best case scenario here, I reckon, would be for price to go down to the monthly pivot, hit this support confluence area, then come back and give me a significant lower high. That gives me a strong indicator that this level is strong or this level is stronger, and price doesn't want to go there. So the logical thing for me is when price doesn't want to go there, where's it going?
Mm.
If X doesn't happen, chances are Y will. And here's Y down here somewhere. So until I get either that or a close above this level, I just can't trade. It's guesswork at the moment. My best guess is it's going short, but only to here maybe. So I don't know if that helps or hinders, frankly, guys. But
well, do you know, mate? I think your point is, I think it is helpful, because effectively what you're saying is the same as me. You've got to kind of wait with this stuff.
Yeah.
And sometimes you have to just say, you know what, this isn't the chart to trade. If it's not clear, it's not the one to trade. We might really want to trade it because it is volatile and it does give us some returns, and it has done in the past. But if it's not doing it right now, then either we wait until it starts to shape up, or we move on to something else and completely ignore it. So
100%. Yeah. As we continue to say, it's not compulsory to trade, and it's certainly not compulsory to trade the chart that made you money a month ago.
Yeah.
If it's not there, it's not there. Move on. Simple.
Yeah.
Lewis, not really the Three Little Indians, because the Three Little Indians, I saw a bunch of them actually, where can't remember. It's one of the charts you were looking at, Ash. Well, there it is there, right? So if you've got a range, I'll show you what Three Little Indians actually is. You got a range in here, right? Probably goes back to there. And then you get false break, higher high, false break, higher high, false break. That's that's my Three Little Indians. I've got no idea what the technical definition of Three Little Indians is, but that's my Three Little Indians. As soon as I see that with a false break followed by a false break followed by a false break, each of which is higher, that's telling me that this structure will break to the low side. Now it's gone to the low side, but it hasn't broken to the low side. When it does, it's often the case that it'll hit support and then go in the opposite direction. So that's the trick with it. Yes, you can trade it down to a support level, but you want to get something off the table then. So technically, actually, this is silver versus the euro, not silver versus the dollar. So I'm not sure if they're the same chart or a similar chart. So technically, I haven't really got Three Little Indians here. But now that you've mentioned it, Lewis, I'm going to watch this like a hawk. And if this breaks to the low side, then maybe we've got a new Three Little Indians. And I'm happy to have new Three Little Indians. We might call them three Pocahontases or something like that.
Yeah. Okay, mate. Well, I think
that's the thing. Sorry, mate. That's the thing about this and trading buddies. If you can point something out to me that I've never considered in my life that actually works, happy days.
Yeah. Yeah. Well, I mean, actually, on that, if there's anybody that wants us to look at anything else while we're here, let us know. I don't know whether we do help or hinder sometimes, but if anybody wants us to look at anything else, then please put it in the chat. Or if you want to offer us some knowledge of your own, then please put it in the chat, because we are effectively all in the same boat. You know, we're all making assumptions. Nobody knows. Lewis is watching the pound Kiwi closely.
And so you should, mate. And so you should. It's right on the money right now.
You like that one?
Oh, yeah. It's ready to rumble.
Is that ready for a short, or is?
Don't know yet.
Is that what you're looking at, though?
No, I'd rather trade it long from here, I think.
Yeah, okay. I mean, it's yeah, that's what you mean.
But it's ready to rumble. I don't know which way yet.
Tell you what, have you got? Is that the pound Kiwi there? If you bring up that weekly, oh yeah, that's interesting actually. Where you've got yours? The two most recent lows.
In the lows, not the closes. You mean there?
Yeah, but if you go to looks like November, December 6th, 2020, December 6th, 2020, which is the one just before your first low there.
December 6th.
Yeah, that one there.
That one?
Yeah.
Isn't that where I was?
You were one back. So that one, and then pushing it up.
You're saying it's through there, right? Okay.
Well, I'm just saying that is potentially going to cause some intraday downside, possibly. You know.
Yeah, it's the zone anyway. We're definitely in the zone.
Do you know what? It's interesting with the Kiwi. I don't like the Kiwi. I think you know, the commodity versus net exporters versus net importers is you know, the first kind of port of call. Totally, that argument I think holds up. When it comes down to the Kiwi versus the pound, this is where things change for me a little bit. Building permits atrocious in New Zealand. There was another number. Oh yeah, visitor arrivals atrocious in New Zealand. You know, so actually the New Zealand economy isn't in the shape that that the likes of the CAD or the Aussie are. So if you were going to trade against the pound, that would be a much better thing. My problem is the pound. You know, it's not so much the Kiwi. It's more, yeah, you got it, Lewis. That's the issue. That is the issue. Is the pound in itself is a bit problematic. Geographically, it's on the wrong side of the planet right now. So yeah, I mean, whether that changes in the next few weeks, and I suppose this is another one, isn't it? Give it some time, and maybe this becomes clearer. But for right now, you're trading on a potential low. So going short doesn't seem very attractive at all. But you're trading a currency which isn't particularly hawkish, so that doesn't seem too attractive at this stage. So retracements.
That's why I'm smiling. Everyone else is going to be wanting to short this.
Yeah. Well, yeah, they will. They will be wanting to short it. You're absolutely right. Probably not here though, right? I mean,
no, not right now.
Yeah. But what a move! I mean, geez, look at that. What 1, 2? Is this
massive,
daily?
isn't it?
These are weekly charts. Goodness me!
It's gone 1,600 pips for 6 weeks.
It's got form, isn't it? Back in 2020, February 2020, we had a similar-ish move. This thing does, when it goes, it really goes, doesn't it?
Yeah, that's of course when COVID hit.
Yeah.
And because the Kiwi's an island, or New Zealand's an island, yes, it's going to do far better. And we always said that, you know, the Aussie, the Kiwi, Cad were always, or certainly Aussie and New Zealand, we're going to come out better out of COVID. But then things turned around a little bit as well. So
yeah,
that's why you saw this going on.
It goes upstairs and comes down elevators, doesn't it? Or out windows, this one.
Yep, so it does. Yeah.
Yeah. That's an interesting dynamic with this one. If you're looking for upside, you're probably going to be waiting longer than if you were just looking to sell this one off.
Well, how many times have I tried? I was looking at this channel.
Yeah.
And it kept giving me everything I wanted to see. And, you know, I had a target up here, always had a target up here somewhere. And I'd get a false break and I'd try and trade it up. No, get another false break. Haven't tried to trade that one up yet. But it's there.
Yeah.
It's absolutely there.
Yeah.
You could put an entry there.
Yeah.
Your stop loss would be here. That's like gone 1.5 times since then.
Yeah.
So I think this is now invalid, frankly.
Yeah.
We need to get rid of that.
Yeah. Could be interesting if it came back to that level though.
Could be. But okay, definitely all eyes on it at the moment. We are definitely at an inflection point.
Let's get
out of here.
Get out of here, everyone. Yeah. As always, thanks so much for joining us. No quiz today, but we probably had enough to
next
talk
week.
About.
John is back next week. Yep.
Fantastic. All right. Have a great week, guys.
Sends his best regards to everyone today. He's had all sorts of issues in Malaysia, and he's back on deck as of the 4th. Is that next week? Next Monday? I don't know. It might be the week after that.
Yeah, so we got daylight saving next week, guys. So we'll be the Trading Buddy show will be
that's right.
Earlier,
yep.
Is that right?
Yes, it'll be an hour earlier. Sadly for those in Hong Kong and Singapore, because that's going to be 2:55. I think 5 to 3 in the afternoon. I think that's right. I think it's currently at 5 to 4, so it's going to be at 5 to 3. And for us in Australia, it's going to be an hour earlier next week, and then another hour earlier the week after that, because Aussies come off daylight saving. I think that's right.
2:55 Sing is what Lewis is telling us. Yeah, fantastic. All right, guys. Well, we'll see you at 2:55 Sing next Monday. Have a great weekend, and have a great weekend to you, mate.
Thanks, mate. You too. Thank you guys for being our trading buddies, and we'll catch you next week. Bye-bye for now. See ya.